Welcome. Today, we're going to explore the intriguing world of global reserve currencies. We'll focus on the US dollar, which has been the dominant force for decades, and China's rising challenge to this supremacy. This is a story that's more complex and surprising than you might think, so let's dive in. Our journey begins with understanding why the US dollar holds the title of the world's primary global reserve currency, a position it has held firmly since the 1944 Bretton Woods Agreement. This status has given the US some significant advantages, like low borrowing costs, strong demand for its assets, and the capacity to finance its current account deficits. The first key to the dollar's dominance is the sheer size and stability of the US economy. Being the world's largest economy, the US boasts strong institutions, a sophisticated financial market, and a history of political stability. These elements make the dollar a safe and reliable store of value. Confidence in the US economy and its financial system is crucial to the dollar's supremacy. Another essential factor is the dollar's widespread use in global trade and financial transactions. About 88% of all foreign exchange transactions involve the dollar. This creates a self-reinforcing demand for the currency, as market participants need dollars for transaction settlement and risk management. The dollar's extensive use in international transactions helps cement its position as the world's primary reserve currency. Trade relationships between the US, China, and the rest of the world also shape the demand for their respective currencies. The US, as a net importer of goods, runs a trade deficit. In contrast, China, a major exporter, has a trade surplus. This dynamic affects currency demand. The US's imports create demand for foreign currencies, which are then used to purchase US dollars, reinforcing the dollar's reserve currency status. Conversely, China's exports generate demand for the yuan, but this demand is often limited due to China's capital controls and the yuan's restricted convertibility. Another significant factor that maintains the dollar's reserve status is the petrodollar system. Most global oil transactions are denominated in US dollars, creating a consistent demand for the currency. This system, known as the petrodollar, was established in the 1970s when major oil-producing countries agreed to price and sell their oil exclusively in dollars. Recently, countries like Russia and China have been exploring alternatives to the petrodollar system, such as pricing oil in their own currencies or using a basket of currencies. However, the US could potentially mitigate the impact of such a shift by leveraging its position as one of the largest oil producers in the world and maintaining its influence within the global oil market. Now, let's shift our focus to China's pursuit of the dollar and the challenges it faces. Despite the US dollar's strengths, China has emerged as a formidable competitor, challenging the dollar's status. With its export-led growth model and increasing economic power, China has been promoting the internationalization of the yuan, RMB. One unique aspect of China's currency policy is the dual currency system, the onshore yuan, CNY, for domestic transactions and the offshore yuan, CNH, for international transactions. This arrangement allows China to maintain strict capital controls and manage its exchange rate more effectively. However, several factors hinder China's efforts to challenge the dollar's global reserve currency status. The limited convertibility of the yuan and the country's strict capital controls limit its use in international transactions. For the yuan to become a major reserve currency, China would need to open up its capital account and allow greater exchange rate flexibility. This would mean giving up some control over its financial markets and allowing the yuan to be more freely traded, a significant step that comes with its own set of challenges, such as the risk of capital flight and economic instability. China's cautious approach towards liberalization reflects these concerns. It's a delicate balancing act, one that involves fostering confidence in the yuan while managing domestic economic risks. Moreover, while China's financial markets are growing rapidly, they are still not as developed as those in the US. The depth and liquidity of US Treasury markets, which are seen as a safe haven by investors worldwide, are unparalleled. China's financial markets lack this level of depth and diversity, which limits the yuan's appeal as a reserve currency. Politics also play a crucial role in the world of currencies. The US dollar's position as the global reserve currency is not just a result of its economic strength but also its political influence and alliances. The United States has long-standing relationships and trust with many countries around the globe, which China has yet to fully match on the international stage. Concerns about China's political system, transparency, and commitment to international norms may deter some countries from embracing the yuan as a reserve currency. The types of products traded also influence the demand for the US dollar and the Chinese yuan. The US imports a wide range of consumer goods and commodities, while its exports mainly consist of high-value services, advanced technology products, and agricultural goods. On the other hand, China primarily exports manufactured goods and some commodities. This difference in trade profiles means that the US dollar is more prevalent in global trade involving a diverse array of goods and services, further reinforcing its reserve currency status. Looking ahead, even though the US dollar's position as the global reserve currency seems secure for now, we need to consider how this balance of power could shift in the future. The dollar's dominance is likely to continue in the near term due to factors such as its economic size, stability, and the petrodollar system. China's challenge with the yuan is hindered by the Chinese Communist Party's (CCP) reluctance to relinquish control over financial markets and its opaque political system. For the yuan to challenge the dollar, China must embrace financial liberalization, develop transparent financial markets, and adhere to international norms. However, the yuan's rise remains unlikely in the near term, as the US dollar's network effects and deep-rooted ties to global trade solidify its preeminence. That being said, geopolitical shifts and China's continued growth could influence the balance of power between the US dollar and the yuan in the long run. As China's economy expands, its financial markets mature, and its political influence increases, the yuan could gain traction in international markets. This could potentially challenge the dollar's dominance, particularly if China is successful in implementing meaningful financial and political reforms. While the US dollar is likely to maintain its leading position in global finance for the foreseeable future, it is essential to keep an eye on the evolving dynamics between the two superpowers. China's pursuit of reserve currency status is not without challenges, but its determination to rise as a global power should not be underestimated. The future of the dollar and China's challenge is an ongoing and fascinating story that will continue to shape the global economic landscape. That concludes our exploration of the US dollar's dominance and China's rising challenge. Thanks for joining us. If you found this video valuable, please like, comment, and share it with others. Don't forget to subscribe and hit the notification bell to stay updated on our latest content. For those who wish to support us further, consider becoming a patron. Your contributions directly help us create more insightful videos. Check out our Patreon link in the description. Your support keeps this channel going. Together, we can make knowledge accessible. Thanks for being part of our journey. Until next time. Remember, understanding the world's economic machine is like being in a jungle. It's complex, it's constantly changing, but if you can understand the patterns and principles that govern it, you can navigate it successfully. So, keep learning, keep questioning, and keep exploring.
Hey, I can sleep at night 'cause you're all I think